Hey guys, welcome back to the channel. In today's video, I'm going to break down exactly how we structured our business and how you might want to structure your business to be both tax effective, give you asset protection, and really create a great structure that is flexible and gives you choices. My name's Luke and I talk about all things real estate, renovating, and financial freedom. But today's video is going to be about business structures. I know not all of you are going to go out there and set up your own business, but you might be interested, so stick around. And I'm going to break exactly how myself as a chartered accountant decided to structure my business as a buyer's agency and how this might help you in your own business and wealth creation journey. So let's just jump into it, no fluff. Let's take a look at the business structure. Okay, so let's kick off with setting up your company. So at the very start of your business, you're gonna set up a company and that will give you limited liability. It'll enable you to ensure that you don't get sued in your personal name and basically creates its own legal entity. So you are as a person are considered an entity by the government, and creating a company creates essentially a separate person or a separate legal entity. Now, you're gonna set up your company and you could call it ABC Proprietary Limited. Now, you could be doing a range of things when setting up your business, but the Proprietary Limited company is what you're gonna run your business through. So I myself run the buyer's agency through a Proprietary Limited company. If you're a chippy or a sparky, or you're selling things online, or you're running a shop, you're gonna want to run your business through a company. This will separate your personal tax from the business's tax, and you'll also need to make sure you do PAYG statements if you've got employees, and lodge quarterly or monthly BAS statements based on your activity within the business to ensure you're meeting your GST liability. So that's step number one, create your company. Now I've called it ABC Proprietary Limited in this example. The next step is, who are the shareholders of your company going to be? Now, if you're wanting to be simplistic, you could stop right here and put your personal name down and be the 100% shareholder of that company, or you could split it between you and your wife or you and your partner 50-50. But what Emily and I have done, and the Rolls Royce of company structures, is we've set up a trust to hold the shares in our company. So the trust holds the shares in the company 100%. The next step is, who controls the trust? And instead of setting up in our personal names to control the trust, because that might lead to litigation, and if we were litigated in our personal names, we could potentially be liable to hand over the flow through assets and cash flow from the trust to those people suing us. We've gone for a corporate trustee to be the trustee of that trust. So above that trust is another company called a corporate trustee. What the corporate trustee does is they basically protect you and give you another set of limited liability for your trust, and then the trust holds the shares in the operational company that runs the business. So essentially there's three steps. You've got your company that is the shop front and does the business, the trust, which holds the shares, and then the trustee, which is another company, which basically protects you from litigation and issues down the track. Now, that's step 1, 2, and 3. Now, why would you want to create this extra structure and this extra difficulty? Your accountant's probably going to be happy about it because they might be able to get more fees out of this and manage your finances. So, you'll be more reliant on them. But that might be true. They might get $1,000 or $2,000 per year, in managing and doing a trust tax return and a company tax return. But why would you want to do this as a business owner? Why do the rich do this? And why might you want to set up this structure as well in your own business? Now, before I jump into more pros and cons, I just want to be clear that this is not financial advice. I am just talking generally about setting up structures, and make sure you reach out to a trusted advisor or your accountant or your lawyer to make sure you get up structures set in the right way for you. So what are the benefits of setting up your structures like this? Essentially, what you can do is you can, yes, have that reduced liability and that asset protection from people wanting to litigate against you. But I personally don't know of anyone personally that has been litigated against, but it does happen out there in the business world. So it is a good thing to have. The next step is tax minimization. Now, this is not tax avoidance. This is well within the legal system. You don't want to be avoiding tax. We want to be paying taxes, to build roads and schools and to keep the economy going. Now, you want to be paying tax, but you do want to minimize your tax. You want to pay the absolute minimum that you're legally required to pay to the government. So let's say your business makes $100. So you've gone out there and started your clothing company or whatever business you're in, and you've made $100 of profit. Now, you can distribute this through making a dividend. The great thing is that dividend is going to go into a trust, and then you can determine who receives the money. Say you've got two people, a husband and a wife. One of them makes $50,000 while the other doesn't make any money. You can distribute the profits from the business to the person that makes no money and essentially minimize your tax by putting it to the most tax effective people within your family unit. The rich have been doing this for years, and it's pretty common for the super wealthy to use trust structures to their benefit to minimize their tax. So the way I've set up this business that I run at Purpose Property, we have a family trust that holds the shares in our company. And that allows us to distribute profits to myself or Emily or other family members in a tax effective way. So I know it's more complex, and I know it's just not a simple, straightforward company, but for those of you that are taking business seriously and you're looking to set up yourself for a long-term business and a long-term tax minimization strategy, this might be well worth it to you. So that really covers the basics of setting up a company and having a trust, receive the dividends and make a distribution based on the individuals controlling the trust. Now, it's not as simple as I've laid out in this video. There are more complexities to it, but that gives you the general structure of a company, a trust, and a corporate trustee. Now, I'm not one of those people that think this model is perfect for everyone running a business. You might just want to run as a sole trader. You might want to run through just a company or just a trust. This is using a combination of a company and a trust setup to try and create asset protection and have tax minimization and have a flexible business structure that can see you into the long term. Now, my recommendation is that you sit down with an accountant or a trusted advisor and look at your structures and look at your situation and see if this might work for you. But it's important to have the knowledge and understanding that there's this option out there, and you can potentially use this structure to your advantage. Now, let's quickly talk about costs before I round out this video, so you can have an idea of how expensive this might be to set up and then to maintain, each year as an ongoing cost. So the setup fees for setting up a company would be roughly around $1,500, and the setting up of a trust with a corporate trustee would be about $2,000. So you're looking at potentially, say, $3,500 to set up a corporation, a trustee, and a trust. Now, for $3,500, that will set you up with this structure. So what are the ongoing costs going to be like, and are they manageable for a small business owner? You're going to be looking at $1,000 to $2,000 a year to ensure that you're up to date with your ASIC fees, your tax returns, and to get your end of financial year advice. So essentially, for $3,500 upfront and roughly $1,000 to $2,000 per year, you'll have this business structure that will allow you flexibility, tax minimization, asset protection. You've heard it all throughout this video. If you have any questions about this structure, leave a comment down below. And if you want to see more videos on business and real estate, check out this video over here. See you in the next video. Peace.